We have a lot to get into and a little time to do it. So the very first thing that we're going to do is start with the S&P and gold. I'm going to turn this into a line. I'm going to leave the RSI here for a minute. And we talked about this double tap about a month ago and saying like, hey, this is pretty good. We are forming that double tap. The problem with the double tap is that we're starting to roll over. So what we're actually doing is the SPY is starting to lose to gold. And the reason that we start with this trade is because we'll remember that this is versus the dollar. So if we look at this versus the dollar, and we can all see this divergence that's right here. And we can all see the RSI divergence where this is pointing down, making a lower low. And we can all see the difference here and how this is making a higher high. We don't even have to spend time on it because it's so obvious. We're going to pack this one in, get to it, and get through it. And we can see here how we are now rejecting on the SPY versus gold as well. So this is not really what we wanted to see when we started talking about this double tap down here and that we're holding and that we're possibly oversold. Matter of fact, what really bothered me that we're starting to see is this roll through the RSI right in here, and that we're starting to point down again. And what that means is that they are buying gold. Now, here's the crazy thing. Besides everyone now turning into a repo expert and everyone's going to talk about the general account of the Fed and what they're doing, and it's all a liquidity issue, yada, yada, yada. Let's just remember that the same people that are talking about that were the same people that were Ukrainian experts. And after that, they were tariff experts. And now they're experts on the Fed. So let's just pretend that they have absolutely no idea what they're talking about. And let's look at what actually is going on. What is happening is they are buying gold. And they are buying gold because they are trying to be defensive against inflationary pressures. Inflationary pressures that may kick up due to uncertainty dealing with what's going on with the tariffs. There could be another wave of tariffs that are put on before this wave of tariff goes away because of what we're dealing with right now with the Supreme Court, even though this is apparently, 4 to 8 weeks out. So if we understand that and we look at the dollar, we can see that the dollar has recently stopped rising. And we can say that that happened on Wednesday, November 5th. So if we look at Wednesday, November 5th, and then we go and take a look here, and we can see here's the 7th, and here we are on the 5th. So we go back to the S&P, and we take a look at where that 5th is. And what you're going to see here is you're having a tough time getting through that area. Now, if you take a look at this on the Qs, what you're going to see if you go to the 5th is it's the exact area that we've been talking about for some time. I'm going to clean all this off. And what we've been talking about in here for ad nauseum, quite frankly, has been this area, that 26. Now, if you were on the public pre-market call today that we do every day at 8:15, we were yammering on about this level going, we keep rejecting up here. I believe that this level is tied more to like an equity risk premium trade. And what they're saying with this is until we understand what's going on, we're done with equities, we're buying gold, and we're sitting this one out. And that's what I would focus on more than becoming a repo expert and trying to figure out what they're doing there. Because if you look at the Qs candidly, and I'm going to clean this off for a second, see this lower low right here? That's pretty nasty. So in other words, when they're more hidden, you're okay. But this one's pretty nasty. And what we were looking for is some kind of rally on that. And we didn't get that today. Matter of fact, what we got was right to that level that we've been talking about, yammering on about, got right up into there, 626, hit it, rejected, and now we have this little guy sitting there. And everyone's saying the same thing. It doesn't matter because there's no volume. Well, there's no volume because there's no volume, right? That's the first thing. There's not some special reason for there's no volume. We could get into yesterday and the fact that, oh, well, it's Veterans Day and the bond market's not open. All right, cool. Let's go down that rabbit hole. All right, well, today you had way more selling than you had buying yesterday. Period. End of story. All right, so then if you go and take a look at the SPY real quick, you had way more selling than you had buying yesterday. Cool. End of story. It's not debatable. What I would say and what I think is important is where are all the players at? So the one thing that we did this morning for everybody was we just set this up and said, here was our peak, right? So there's the peak, and we're going to just drop a line from that peak over. And we're going to see from that peak VWAP over, we rallied over, broke, retested, and then we lifted. And now we're up in this area. And what's starting to happen is that the SPY is starting to outperform what? The Qs. You don't want that because they're buying parts of the SPY that are going to be what? Defensive. And you see how the peak VWAP on the Qs can't get over? By the way, before I forget, if you're trying to get in the community, please check to see if you had an email. They would have gone out no later than a couple days ago. I'm completely, utterly backed up right now, and I believe there's 24 hours left to get in. So if you are on that wait list and you're trying to get in for 2025, please check your email. I will try to get another email out, but I'm absolutely slammed. So please take a look. Thank you. If you look at this level and how this is going, what did you do? You rejected. So the Qs are rejecting. So then we go take this a step further, and now we're going to look at relative performance. SPYs divided by Q, and we're going to take a look at what's going on there. You can see how we connected the dots, hopefully. If not, I'd go back and watch the last 5 minutes of this video because it's going to start all tying together. Now, we're going to turn this into a line. Why? Because we can, and it's easier to see. And what you're going to note is periods where the market doesn't do great, like really doesn't do great, is when the SPY is outperforming. You want the Qs to outperform. Always want the Qs to outperform, right? So if you look at 23 and when the SPY fell off a cliff, well, the Qs were outperforming, right? So if we go back and take a look through time, SPY divided by the Qs, you can see over time, these kinds of rallies from November up, like no one had a good time December 2021, right? That was not fun for anybody. So when you're seeing these spikes, that's what this is telling you. So while this is minuscule, if you want to take a look at May or June 2024, or you start taking a look at December 24 to what happened into March when we got all that liberation and winning, this is what? This is when we stopped all that liberation and all that winning, right? And then we would come here and see August 14th over. Whenever the SPY is outperforming, things are not great. And what we're seeing from November 3rd on, quite frankly, right from where that dollar peaked, what are you saying? You're saying the SPY outperformed the Qs. When this happens, what tends to happen is that you'll start seeing weakness across the board. Now, without getting into the repo and all the people that are now geniuses with repo, and I mean that as nice as I possibly can, I would focus on the more important things, like why do people care about the dollar? All right, so when the dollar forms a bottom, it's bullish for Europe and Asia inflows into US equities. Why? So European banks will use US stocks and they will put money there, assets there, okay? If you've seen this before, if you're in the community, you would have seen this about 2 weeks ago when we started talking about it down here. It's why it looks familiar. Actually, it was like 6 weeks ago when we saw this bottom, because that's why we actually rallied. Why'd we rally? Because the dollar rallied so that Europe would start putting more money in. See, the thing about Europe and Asia, if they put money in and the stock stays the same, but that goes up, they're still making 3% on their money, right, over this period of time. If it starts going down and we hit parity and you're going down, well, it's not rocket science. I mean, here's July 31st, right? So when we see this over here from the 5th or July 31st or that August 1st date, any of these dates, you're going to see it where it gets pretty darn ugly, right? And that's just the way it is. When you rallied up and then roll over, it's pretty obvious what's going on. So what we want to do is focus on that and go, all right, well, what does that mean to us? And again, you can see these kinds of levels, like right in here is where we just talked about that peak from before. And you'll see these peaks. What we need to see is we need to see the dollar rally. Until this stuff's probably settled with the tariffs, I think that that's what we're dealing with. The problem you're running into here is if this was down, up 1, 2, 3, down, and we don't break through, this gets ugly, and this gets ugly fast. And that's what you want to take from this video today. I don't know what's going to happen. I'm going to show you a 4-hour chart. And you can see that it's in lockstep with what it's supposed to be doing. But when you got up here in the way that you rejected today, it's a concern. The only benefit that I can see so far out of everything that's been going on today, and I put on a bunch of new stuff and I got out of it. The only benefit is that's the 50%, and that wick didn't close below the 50% line, but it did afterwards, which is not great. So when they start getting out of this stuff, they're going to get out of all the speculative excess, and they're going to start buying the defensive names. But this is what was really troubling today, to me, at least. It might not have been to you. You might not care. But this is what I think you should care about. So when Apple tried to break out, and I'll clean all this off for a second. So Apple forms an all-time high close. And you might look at this and say, well, that's not a big deal. You know, it's just another inside bar. No biggie. We'll get there tomorrow or later in the week. This is where the problem comes in. When you flip a VWAP, like that peak VWAP, you go and you have an inside bar and you stop. You need to watch this tomorrow very, very closely. Because the problem for me with this name was this. And I'm going to drop this out for a minute and get rid of that VWAP because it doesn't really matter. It looks like they took it off for us. All right. So what really got to me was this. And we'll go to this indicator because it'll help us. And you'll see yesterday's close right up here. And all we're going to do is focus on that area for a second and go, okay, well, this is where we closed yesterday. Right. All right, great. What is that really telling us, and why do I care about that? Because what happened when we got to yesterday's close? We got there, they tried to break, got over. As soon as they did, everybody that bought yesterday, they decided to get out. Now, the important thing about this, and you're like, well, who cares? They just decide to get out. You know, retail panics. Now, this is retail panicking. This is institutions waiting until 2 o'clock in the afternoon to figure out what they're going to do. And what they did was they got out of the trade. It's no different than this Google. And by the way, I am in Apple and I do own Google. But when I start looking at these trades, okay, well, this is where we closed. We couldn't even rally. We couldn't even get up there. This to me is kind of an issue. If we look at that level, where'd we stop? What became resistance? Yesterday's low? So yesterday's low, which was the open, became our resistance today. And this is from a name that hit yesterday. Another thing is that you can always tell by market sentiment which way we're supposed to be focused. All right, this sounds pretty interesting. It is. I'm glad you asked. So here's today's high. IBM comes out with a new quantum chip, 30% faster, doesn't take as much to drain, right? I think it's like a more efficient, something else. Does something else that I don't really understand, right? But quantum. So let's go with that. Rallies up. Everyone's like all into it. Everyone can't wait for the new quantum chip. That lasted for who? For a half hour. Well, who buys in the first half hour? Retail. What did institutions do? Oh, they got out. Okay. Yesterday's high. It broke yesterday's high, and that was it. And then you just sold down. Now, you didn't get to yesterday's close, but look from 2 o'clock on. Institutional selling. The last hour. If we look at the last hour of the day, selling. This is not what you want to see. AMD received a ton of upgrades today. And people will say, oh, you're nitpicking. Well, that's what you're supposed to do. That's your job. You're supposed to understand what's going on. You look at the rally down, up by the end of the day in the last hour, was the last hour higher than the first hour? No. 10:30 marked the high of this trade. Hit there. Who stops in the last hour of trading? Retail. And then here we go. Right? You can see institutions. You might have some short covering or people that actually believe in this, whatever. But at the end of the day, we really didn't go anywhere. And in and of itself, this is starting to become our problem. Now, if we look at some simple things, and we've talked about this, where the S5FI and the NDFI, we don't want the F5 outperforming the NDFI. So this is stocks above the 50-day, stocks above the 50-day, S&P divided by NASDAQ. When they peak and roll over, it marks a bottom. When it's set up like this and they peak and they roll over, it marks a bottom. You can go look at September 3rd. You can go look here around April 7th, right? When we got done all that winning and liberation, right? If you go back through these periods in time, you'll see it. It's clear as day. When you're rallying up, you're weaker. It's just the way that it is. You're rallying up, you're weaker until you spike and you clear everything out. That's what's happening here. And that's how we have to view this. If I take a look at the NDFI again, and I don't really need the RSI for this, but if we look at Wednesday, I'm still fighting the 50, and I'm not really able to get over that. And I think that that is an issue. And there's some other things here I just want to address. So when I look at NBIS, I understand why this name is down. It's down because they're issuing bonds to grow. That's fine. It is what it is. I personally think this was a blockbuster, and I think it's a great quarter, and I think this thing's going to be around a long time. But this red marked the previous put wall. What they're doing is they're moving their put walls down. This put wall now is 90. So I went from 105 to 90. So that is telling you that they are leaning on this stuff. And when you start to see them leaning on it, and we're not really seeing any kind of area where they're trying to hold. Now, yesterday we had XBI. Stay with me. So we had XBI yesterday. You have any real follow through today? No. Everybody's buying one name. We're all buying Lilly, right? That's really where we're at. Amgen looked like it was going to break out, completely reversed. That's not a follow-through day. And people will say, well, it already broke out. Well, it broke out this was your follow-through day, and you don't really expect a reversal on a day like today, right? You don't. So we really had one name that was up that everybody was chasing. And then you have this pricing name that the pricing's just off, right? On SanDisk. If you listen to this on Saturday, if you haven't watched Saturday's video, but the pricing's just off. That's why this is going all up, because people were way off from where this thing and how much money it's actually making. So that's why this is rallying where you're not really seeing Micron or STX. You're not seeing the others rally as much. Why? This is a pricing issue, right? So another thing that we should just take a look at and focus on. So then we go and say, okay, well, that makes a lot of sense. And then we would focus on that and go, well, what about the other sectors that have been running? We tried to take out these highs. We rejected these highs. These lows are starting to break. So you're getting to the point where you're getting to a point where you have a change in trend, whether we want it or not on some of these sectors, we're getting it. And it is what it is. We can talk about it, pretend it's not there, or we could just deal with the thing that's right in front of our face. When you start making this and this and this and this would be a lower high. This would be a higher what? Or a lower low. Stay with me. I need more coffee. See where I'm going with this? Hopefully you do. I know we should do these live every once in a while. And now you're fighting now you're fighting the 55, right? But wait, there's more. Here's quantum. You're starting to roll over. All those quantum names, when I was telling people that I was shorting like this RGTX, and everyone's telling me I'm crazy and I don't understand. We started shorting this thing at 260. It's at 97 today, right? This thing's going to wind up going back down to like $30. Why? Because of the structure with it. But all these names, guys, like they're making $1 million a quarter, right? And they're just starting to break down. But these kinds of Hing patterns, This isn't going away. You might rally up through it. And here's where it gets, to me, super interesting. If you take a look at something like Meta, now, to me, there's a big resistance at 600, but this broke today and we'll clean it all off. Now, whether it stays down or it doesn't stay down remains to be seen. But if you look at volume, and these are the ones you want to look for, if you're like, well, what names are going to get hit the most? Listen to what I'm going to say. Forget Tuesday for a second. If you start finding names where Monday's volume is encapsulated by selling, Monday's volume is encapsulated by selling on Wednesday, you want to pay attention to those. Why? Because you had an oversold bounce in the market. And that's why we rallied. Nothing more, nothing less. So when you start seeing those kinds of names, and if you go and sort for those, you'll be very happy. You try to get through on the 4 hour and you've already rejected. So the idea that we don't have a shot at getting to 600 is pretty laughable. The other thing we saw here today with Microsoft that it was super interesting. Look at this bounce on Microsoft. So really all we had today was just put wall covering that happened right here. You can see that positive divergence right there, right? When people say positive divergences don't work, you can just show them that. You don't even have to say anything. But what did we do? We just up like a rocket for 3 hours, no news, no nothing. And here we are. There's definitely a change that's going on in the market where even good news is now not being rewarded. And frankly, I think the majority of it has to do with international money not coming into this market. You guys are welcome to comment on what you think it is. I'm always curious about it. But for now, I would watch the dollar tomorrow. We understand that we're not going to get all this data that we think we're going to get, and let's go from there. That is it.